Shares of General Electric fell today as the company enters its next chapter. After more than 100 years as a Dow component, GE will be removed from the blue chip index, as we reported last night. During its time as a member of the Dow, GE saw some very high highs and some very low lows.
GE literally changed the world, from light bulbs to locomotives to household appliances, power generation, and jet engines. With a market cap of $594 billion in the year 2000, it was the world's most valuable company. But its removal from the Dow Jones Industrial Index next week is the latest symbol of how far it's fallen.
It's clearly a sign of the difficulties GE has had.
The index has decided that it was irrelevant.
Now valued at $113 billion, GE is still bigger than United Technologies, which is staying in the Dow. But GE's share price is down more than 50% in a year. GE embraced change in the 20th century and grew, developing computer technology. And after Jack Welch took over in 1981, it acquired NBC Universal and later became one of the country's biggest banks. But under Welch's successor, Jeff Immelt, the company stagnated and began to shrink. It shifted away from banking, sold off NBC Universal, and bought oil services giant Baker Hughes, just as oil sank. With John Flannery in charge, its once coveted dividend has been cut in half. No wonder the company barely shrugged when its impending removal from the Dow was announced. GE's statement says, "We are focused on executing against the plan we've laid out to improve GE's performance." It does nothing to change those commitments or our focus in creating a stronger, simpler GE. Icons like GM and Alcoa have left the Dow and survived. Now investors wonder if GE can find a way to bring itself back to life.